Okay, traders, what's going on? Jamie Saettele here. Welcome to the Midweek Strategy Webinar here at SB Trade Desk. It is March 30th, 2016. Right off the bat, question real quick from Leon asking about last week's webinar, suggesting sideways or up for DX this week, followed by substantial DX weakness. Does the strong DX weakness this week change anything? No, I mean, well, we after that rally, we're looking to fade the rally, right? So I'm not sure if this week, if I said this week was going to be up or anything. I guess if I did, that just proves forecasting like that it doesn't work that well. But that's why, we were taking short dollar setups, right? That's why we were long euro and long Aussie into yesterday. For the most part, I mean, yeah, it did take a dollar CAD long as well. Dollar CAD actually might be back in that trade soon at some point, but Euro and Aussie, um, looking like they're headed to their targets up around 115 and close to 78. And we'll get to that here in a second. Let's just go over all the charts first, and I think it'll hopefully clarify, I guess. But the dollar in particular, we'll actually start with that one this is the S&P 500, right? SPX. And if you go to the web page, the long-term chart under the S&P 500, comments, didn't have many comments to make. It was just that the 4-hour slope had been working well. Support hold late in the week does keep us on track for the bigger top around 2070. Today's high, I think, is actually a top of some sort. Potentially a decent one. Today's high is 2073. And if I go to the short-term chart, this is that line that you see here. And as you can see, it was literally right on it. So I do think that we are headed lower in the S&P from here. You can't rule out little retest here and there on the upside, but more or less, it's time to look the other way. I think it would actually, if we start to turn down here, it would actually be pretty bearish because if you notice on this, the bullish slope that had held, the entire way up, that we started following, really about a month ago, the market, the tops, as you can see, up on this parallel, right? The tops that we had at the recent really short-term peak were up on the median line, and finally this one is actually shy of the median line. So that is the concept of space. It's like divergence and with the momentum indicator, in the sense that you have the market basically peaking out before it gets to resistance. So I'm starting to look lower now. Also, tomorrow is month end, last day of the month. Things can get a little weird on month end type of stuff, so do be wary of that. We can take advantage of it as well in FX, and I will get to how I'll be looking to do that as I look at the FX charts. Okay, but as it pertains to the S&P 500, if you do look at price action from the low back on the 24th, you can see a 1, 2, 3, right? So that would suggest that we do get a bigger dip in 4 and a rally in 5. For me, I'm looking lower now. I don't really care if it goes to another high. I think that the bigger move is lower from this area, whether or not it goes to a new high or not. Okay. But, just being aware of this, I wouldn't be surprised, so to speak, if you did get a dip down into this region as a 4, Testing, testing. Sorry. Sound, I know has we got a problem here with the sound. And just keep on me about that, and I will continue to, I have to restart the microphone whenever there's a problem with the sound. Sorry about that. It's just something we have to deal with when I do webinars in this office. So in any case, looking here at US dollar, Matthew says the sound was out for 5 minutes. Oh my goodness. All right. Okay. Well, all right. So I'll just get right to the point then on this. So resistance for this US dollar is 11,953. Okay. That's the low from back here on 311. Your support is down here at 11,737. Obviously, a good ways until support here. Resistance is, not really that far away. So any, rally is counter trend in the dollar, especially below this median line and looking towards 11,737. And you'll see that as we look at the other dollar charts, which we'll do right now. All right. Euro. This is essentially the chart that was posted over the weekend. We started the week at support. We have ripped. We got our 1260 target, and we've actually blown through it. And I'm looking at support at this point. I was looking at 1240.60 yesterday. The entry was 65, wasn't hit. I actually think today's low might be support. You can see the sliding parallel that crosses through these highs, okay, and also the high back here on ECB day, which was 310. It also crosses through Fed day, which is 316. Okay, tomorrow's month end, you do have a high from 321 at 1284, and today's low again, 1282. I'm telling you right now, there's going to be weird price action as there usually is at month end, and tomorrow, by the way, is also quarter end, so it gets even stranger. And what you end up with are basically lots of spikes, stop runs, what have you. The market moving kind of crazy on an intraday basis. At least usually that's what you tend to get at the very end of the month, and especially the end of the quarter. So for me, and this is also, by the way, the trend line that goes from August to February, and you got a nice confluence there. So I'll be looking at support in the 1280s and probably putting the entry there now. Run through stuff at the end of the day, of course, and confirm putting the entry there. But that's probably what we'll be doing, is putting the entry around the 1280 region to get to 115. Okay, before you get a more substantial possibility of a pullback. And again, you guys all know where this stuff comes from, as far as the longer term slope and stuff. Just check out the long-term chart. You do have, you can see where it comes from at that point. But, we're getting to the point now where we're kind of entering the big breakout time, right? As far as the analog that we've been following for a long time. And we could be on the verge of basically 1,000-point plus rally in the euro over the next month. Okay. Getting into the seasonals, for example, April, again, one of the better months for euro. Okay. So yeah, so April and June, the two best months of the year historically for euro. And seasonal top does tend to come in place towards the very end of April, okay? So we're entering basically this phase right here, all right? Or you tend to get a pretty strong rally. So no change there. Still want to be on the long side of the euro. Just have to, get back in, considering that the target was hit, okay? Let's move on quickly to the dollar Swiss. Is actually a good one to look at as well. If I pull up real quickly, let's pull up just an intraday chart actually of euro. So, okay, here's that chart, right? And here's basically the 1280s, okay? And this is the trend line. So we're basically looking like right there, okay? And if you look at this is a 4-hour chart. You look at a 60-minute chart, you can see it pretty clearly with a wave 1 up, a wave 2 down, a wave 3 up, a wave 4 down, today's low would put you right at the former fourth wave anyway. Now this is the volume level. This is why I had the entry at 112.65 last night. You can see here you do have 112.64 is the volume level. And here's the volume chart for all the futures. British pounds actually this morning came right into the volume level to the tick and got a little bounce. It was good for a short-term scalp, nothing more. But you can see that there, okay? Little support action on the volume level. But yeah, the euro is right. That level's right here, as you can see. So we'll still be looking for that for support. But kind of thinking that euro could end up finding support a little higher, about 20 pips higher than where the volume level was from yesterday, from the Yellen dollar smash, if you will. Okay, talked about this morning. Here's dollar CAD, or this is Canadian dollar futures, excuse me, not dollar CAD, but Canadian dollar futures. Ended up obviously getting the exhaustion on the high volume level as noted this morning. I'm not sure how important it is. We'll look to see as the days move on. Okay, moving on. So that is euro. Basically looking at support in the 1265, 1285 region for a move up to 115 as initial target, before you can get the potential for a much bigger move to the upside. Okay, moving on to dollar Swiss. We'll go to that dollar Swiss now. Dollar Swiss actually came into a short-term trend line today, getting something of a bounce. I don't have it on here, you can see, because I don't think it's that important anyway. But here's the trend line. Okay. You draw it from right there. Yeah, so we've into a trend line. We're kind of sitting on it. You can see very clearly dollar Swiss in its impulsive decline. So, euro is a little sloppier on the origin of the rally. Dollar Swiss on the origin of decline. You can see 1, 2, 3. And just like we'd be looking for a euro dollar dip into 112.85 to get long, same can be said for dollar Swiss. As far as a pop into today's high would actually be your resistance at 96.70. So what's interesting, I think, is that we have this short-term wave structure heading into the last day of the month, last day of the quarter, which does give you good opportunity to basically fade some moves tomorrow, right? Because if you do get a dollar pop off, a short-term dollar rally, it's going to be, our expectation, because we have the wave structure in the short term, is that it's corrective, okay, and that it leads to new dollar lows. And that's what, combining basically that with the fact that it is month end gives you, I think, a pretty good plan heading into tomorrow. All right, euro probably being one of the better ones, just because it's so well defined as far as the 115 and also the potential, for a bigger rally if stocks start to accelerate to the downside at some point. And we are coming from resistance, obviously, in stocks. So. Okay, pound dollar. I love the long idea, long side. Again, talked about this earlier on Twitter, put a chart up, but again, probably about 143.15, maybe 142.80 as far as support's concerned. I still think over the next month we can head to 150 plus in pound dollar. And let's go to a short-term chart. Here's a 240-minute, okay? So 4-hour chart, and you can just draw along with me if you wish, so you have this up. But here's where I do think that you're going to end up getting, kind of the top-notch entry on the long side for pound dollar, okay? So basically the 50 line, right? And you could put potentially, you can put like some sliders sliding parallels around the around that, because you do go off some peaks, like for example this one right here, so it's a little higher, right? And you can see you do have some influence around that level, if you will. And then of course there's a lower one, which is pretty well defined as well. But you've got with that one, you've got resistance and support in a couple places. Here, and the spike is really good. Okay, but this one here, I love buying weakness tomorrow into 42.80 to 43.15. Okay, and there is actually an even shorter term slope that you can look at here. Some of you may have already done this, but you can look right here. You can see that we came off the median line. Okay, and with this one, now this is like where you start getting into like a bunch of confluence, right? And it might be that your chart looks like a complete disaster and a complete mess, but it's nice to know that there's a lot of stuff there in the way of support, right? So you can see that crossing above former highs, okay, basically calling it former resistance, intersecting with a similar zone. If you go off that level or go off this level, which is a really good one because that was the low and that was a spike high. Okay, was that 2 days ago? And that actually is pretty close. That's like 43.40, so that's not very far away. But on a swing position, I'll be looking more with the flatter slope, right? So we're basically looking at getting on the long side right here, just basically, with the idea. Remember we talked about, kind of what was it last week? We talked about the expanded flat that you have in pound. Well, you kind of had like a multiples, I guess, expanded flat, a plural expanded flat, because you had this ABC, but then you could say ABC is A, B, and then another C. Okay. Leon asking, do you think we've topped on weekly on Euro Pound? I'll look at that, Leon. Thanks for bringing that up. I'll look at that towards the end. Let me write that down. Kind of like look at the, some of the non-dollar crosses at the end. We'll take a peek. In my opinion, Leon, looking at how the market's trading right now, with kind of giving you opportunities to maybe trade both pound to the long side and both euro to the long side, I actually don't think that it's a good place to trade right now with Euro Pound. Put it this way: if Euro Pound comes off hard from here, it'll be because pound dollar is exceptionally strong, in my opinion. I don't think euro is going to be weak, okay, from here, right? I think that 112.80, 112.60 is going to hold as support. So, and there's a big upside. There's upside potential on euro. So maybe it just means that there's more upside potential on pound. I don't know. We'll see. Anyway, this is what we're looking at for pound. Basically, good support here as far as the 42.80s, 43.15 region. Stops under that low from yesterday here, 41.90. Okay. And again, targeting just an explosion higher into the 150 region throughout the month. Pound dollar seasonality, we are entering basically the most bullish month of the year for pound. April is right here. You can see the big green bars. This is a 30-year look back, 20-year look back, 15, 10, and 5. What's really interesting is that it's been even, what have been the last 5 years? We've been in a dollar bull market, right? Dollar bottom in 2011. Well, even in the last 5 years, even during the dollar bull market, pound's been a huge performer in April. Okay, so we do have significant upside potential based on not just our charts as far as the slope and everything else, but also on the seasonal aspects, looking very promising. Okay. All right. Okay, so that's pound. Let's look at Aussie. Aussie's headed to 77.80, and I've said that multiple times. I do think that Aussie heads up to that region and is a buy on dips until we get to that region. So here it is, Aussie dollar, and why 77.80? That's the long-term slope line, right? Going through all these lows back here in 2013, 2014 became resistance. In 2015, all last year, May as well, and it's pretty close to where we are. So we're getting very close to resistance in Aussie, but not quite there yet. So on the short-term chart, if you were to turn down here and pull back a little bit, and I do think you can, basically looking at support now where old resistance was, which is 75.90, and that's incidentally where we actually got out of the trade, right? It's where our target was hit. So I think there'll be an opportunity to get back into this trade on Aussie dollar. It's set, around 75.90. And again, that's tomorrow, so month end. So 75.90, take it up to 77.80 or so, and you can see on the daily chart here's those same lines, right? The go 2013-14 lows, 2015 highs, and really you can get in there, I think, tomorrow or Friday, and get up into that region before you can get a more meaningful setback. All right, so that is Aussie. So getting some pretty clean techs as far as the levels are concerned here on on a lot of the dollar pairs. Okay, that would be Aussie. Keep this Aussie the chart in mind, or just the fact that Aussie, I think resistance is actually not that far away, right? That to me is interesting that you have the upper parallel bullish resistance, if you will, and you do have the long-term kind of slope resistance up there, parallel resistance, because when we look at some of these crosses at the end of this webinar, you'll kind of say, oh, well, it makes sense that Aussie's at these levels and could maybe perform a little poorer over the next number of weeks potentially. Okay, and pounds coming off a little bit here, 43.60. Yeah, keep that 43.15, 42.80 level in mind. Kiwi dollar, really pretty similar as far as Aussie is concerned. We had a pretty big rip today, or I should say the last 2 days, right? And I still think the Kiwi could get back into 6,800 to 6,840. Okay, yeah, there we go. All right, so I don't think we missed too much there. Kiwi, still think that we can get down to 68 before we get up to 70.35, before you get a bigger top. Again, 70.35 is huge, okay? And the area around there is just really, really big. You remember this, okay, was support throughout 2014 before you really fell apart. And that's where that slope line comes in. It's also where you do have, the uptrend resistance levels at. And here, candle chart, kind of see it. Okay. So it's right there. Really this week it's 70.18. 70.35 is 2 equal legs from the low. If you don't measure off the spike low and you measure off the low in September, it's actually 70.07. Okay, so kind of the region just above 70, in my opinion, it could be pretty good resistance for Kiwi. And then of course, if we go really long term, this is your slope that goes back, Andrew's pitchfork line that goes back to 1985, and guess where that median line is? That's 71. So, you do have, and that was support back here in 2010. So you do have a lot of stuff, if you will, up in the 70-30 to 71 region, that whole handle, if you will, the whole 100 pips handle. And, I think that's where you could get the next, strong reaction on the downside. So immediate trading focus is still higher, and I'd be looking at 68 to basically, get on the long side for Kiwi. Again, this could happen over the next few days, maybe even tomorrow, given the month end shenanigans that do tend to happen in all markets. So we will be looking at that heading into tomorrow. Okay. Okay, dollar yen. Here's the short-term Aussie chart. This is the one we've been following, right? You can see it too with Aussie real quick. The kind of 1 2 1 2 3, right? Pullback 4, right? 75.90 former resistance. Kind of look at that as support now. 76.07 was the Yellen close, high volume close yesterday. So that whole region around 76 is pretty good as far as support, as far as I'm concerned. Yep. All right. Dollar yen. So dollar yen, kind of tough to reconcile, I guess, looking at the long side on this market, because again, the S&Ps have come into resistance, but you know what? We've gone completely batshit crazy as far as that relationship's concerned. It really isn't happening anymore. You do have a dip, okay, in here into 112 today. So, but 112.20 did hold on a 4-hour closing basis. That was the big support we were looking at. We did get a pop, immediately thereafter. We are holding this level even as stocks are coming off. So that relationship really right now is no longer underway. It's not, it's not really doing anything. Where's the resistance? Again, the red line is yesterday's high volume close on Yellen. That is 112.98. So that's also the median line. So 112.98, I think, is the level that you could see resistance from here if you're going to try to go down again. But I'm given this chart, long-term chart. It's tough to be like really bearish immediately on this, right? I mean, we've continued to hold this thing, and this is the long-term slope. Again, draw it off the 1990 and 1998 highs. Okay, it was resistance back here. Okay, extend a parallel from the June 2007 high, and here you are. So I think we continue to consolidate a little bit. Japanese New Year actually starts tomorrow. Okay, or sorry, not tomorrow, but Friday, and continue to consolidate potentially, and maybe even get up on a retest a little higher, right? That's what I'm thinking as far as dollar yen's concerned. I'm really not that comfortable trading dollar yen at the moment, just because I don't, I can't really reconcile in my own mind, how this is going to work with the topping S&P and everything else, and crude oil coming off again. Dollar yen would seem to be under pressure and mitigated on the upside by those things. And we also have some crosses, yen crosses, that are some big levels, but I think they're more indicative of CAD and Aussie than they are of necessarily yen. Okay. All right. Okay, dollar CAD, let's go there. So it did take out, this is the weekly chart, and when you look at the weekly, there's really not much of a change here. I'm still looking for a fourth wave low. Still think, it could have been, today. I mean, we did take out that low. I still think there's bigger risk on the upside. As you know, posted this morning on a short-term chart, but we did hit this level, right? Basically the short-term slope that we've been following. And if you remember, right here was where we were buying it last week, right before this big move up, right? So that same line actually is acting as support today, 29.93, okay? And remember, crude oil, this is the same chart that you saw last night, came, got a bounce off support. Well, it's gotten slammed, okay, from that post inventory number today, which was at 10:30 New York time. And again, if we break this level, it's a big deal, because remember what happens if you break that level, it basically suggests that you do have the next leg lower going on in crude, much similar to what happened back here, right? Once you break the lower parallel, you'd be looking lower. Now, I actually thought that we'd end up and we still could hold up a little longer in crude. But, given the bigger overhead resistance that we have come into, and the weekly is just astounding, right? I mean, look at that. That's perfect resistance right there, okay? The risk to me is lower, which means the risk, in my opinion, in dollar CAD is higher, or I should say Canadian dollar lower, which brings me to the cross that I wanted to look at real quickly. Okay, and one of those crosses is CAD yen. All right. And here it is. CAD yen came into ridiculous resistance just now. The year open is 86.99. Today's high is 87.11. Okay, you have a trend line that goes back to the 2015 high, goes back to the December 2015 high. You have the line that extends off of the 2014 October low, as well as off of the January 2015 low. Okay, this is August 24th, where we went right through it, but it was more or less support, as you did hold that on a closing basis. It was support thereafter, and we've now come back into it. So this could be where CAD yen absolutely falls apart. Okay, now again, how in the hell can I be constructive on dollar yen and be thinking the CAD yen could fall apart? Well, all I'm saying is the CAD yen's at resistance. Okay, for one, I don't know what dollar yen's going to do. Leon's saying, so if CAD yen declines, it would be primarily in dollar CAD. Well, that's what I think would happen. But again, I don't know. And also, it might not happen, right? All I'm saying is that this is a really good reward to risk situation. You've come into good resistance on CAD yen. Okay. I would want to see the market, come off some here. Okay. And maybe make something of a topping pattern. And if it does, then great, right? I mean, there's a couple ways to trade this. One, you could trade it and be, really ballsy and trade it right into the year open resistance. Okay. I obviously am not going to tell you guys to do that, because that's not for everybody. And, it's also, you could be out of that trade in like 10 seconds, right? It could blow right through it. But that's the way that I would like to do it personally, and that's the way I trade. But if the market comes off here and starts to make some sort of a short-term 5-wave drop or whatever, puts in some bearish, action on the short-term chart, then yeah, you've got the opportunity to enter with a stop up here. It gives you more risk, less size, whatever, but that would be the way to do it as well. So a couple different possibilities there as far as CAD yen. But bottom line, this thing's at resistance. So if CAD yen's going lower, it's going to go lower more or less right now. Okay. Aussie yen, resistance does seem to be a little higher, but it's a very similar setup in that you do have this trend line. This one actually goes all the way back to 2014. So 2014 high and 2015 high from May was literally right on the spot, right on the nose resistance in December, and now we're back to that level. In fact, this thing's been a perfect channel. Even on the declines, it's been support, which is pretty crazy because those have been very emotional markets. But here we are getting up into resistance, pretty close to it, I should say, for Aussie yen. And this is literally yeah, what we say Aussie dollar resistance was like 77.85 or so, and currently Aussie's trading 76.50. So you could certainly imagine Aussie dollar trading up to its own resistance at 77.80, and then having Aussie yen trade up to its resistance at 87 or so, and then they roll over together. So you're seeing the same thing in Aussie yen that you are with Aussie, and that is resistance is a little higher for this market. Okay, but not much, just a little. So you also have 5 waves up here. So it's possible that you have a major low in place down here too. But you could have a 1, 2, 3, 4, 5, get a big pullback from here, and still get down pretty low. Okay, so an interesting chart nonetheless. And bottom line here is that this is resistance, and it's a little higher in Aussie yen. All right, maybe yen just goes stationary for a while. I don't know. Maybe dollar yen goes silent, and it's been known to do that. It's done it a couple times over the last several years where it just goes sideways in a very tight range and doesn't really do anything. What about pound yen? Because this one, you're like, I'm all bulled up on it, right? I think that we could get a lot higher. And I still think that. So maybe, again, maybe that just speaks to pound and Aussie and CAD more so. Maybe pound CAD long and pound Aussie long are really good trades. Okay. Again, here's the pound yen chart. This is from last night. We're still looking at support down here. Okay. And it would be around 160.80 at this point. So, that's a level to look at for support. Let me see what the Fibo is on this, because I guess at this point you could say you have something of a short-term high in place because it has rolled over with a 4-hour reversal here. 160.50 is the 618. 160.50 is the 50%. 160.02 is the 618. So maybe this is not the right line to buy on. Maybe you actually get a little lower. Maybe you get down into a confluence, right? Maybe we get down here, right? Maybe we have to be a little more patient with this, with this potential setup here, okay? Either way, it's still something to follow and something I'll continue to chart and put on the setups because I think there's massive potential there. Okay, what else do we want to look at? What do we get? Aussie yen, CAD yen, pound yen, we did those. I want to look at Aussie Kiwi real quickly. So Aussie Kiwi, here we go. Okay, scroll out. This is an old chart, actually. Okay, but we've broken through this old kind of sloppy resistance, resistance. Remember, you do have that huge bottoming pattern that's been going on for a very long time. We're talking back to 2014. At this point, it's 2+ years. And then here's the short-term chart. And what you want to look at here, really quite simple. Just draw yourself a little pitchfork structure right there. And you end up with horizontal resistance. Okay, which could provide support. Here it is. Okay, so very clean. You end up with horizontal resistance at 109.70. Okay, and that ends up coming into the lower parallel, which, as you can see, was resistance right down here, or sorry, support right down here on the year open. And that was very late February. That was actually a Friday. I remember that. That was 2/26. And that was a Friday, so maybe we come into support here at the very end of March again, just like we did at the end of February. Okay, that was Friday month. That was kind of towards the month end, right? And you had a gap up the next Monday, and it's been off to the races. And now Aussie Kiwi's pulling back, so watch for that Aussie Kiwi support. This could coincide with Kiwi trading up into its peak near 70.35 to 71. Certainly a possibility, but as far as I'm concerned, this is a good setup in its own right. Aussie Kiwi watching for 109.70 support. Okay. And then Leon, you had a question early in the webinar about Euro Pound. So why don't we look at Euro Pound? Okay, let's see here. Euro Pound, I have to work on drawing the new stuff in. This is an old workspace. And lo and behold, we actually, you can see here, this is from way back in the day. And you can see we called this 1, 2, 3, 4, 5 back then. That ended up being a diagonal. Go back to your old charts and you've got tons of stuff in there. That's what we have here. Okay, so this one, all right, so this is basically, you're working on, this is a trend line. Okay. All right, clean it up. Okay, so you've got a trend line. This is the Euro Pound weekly chart, okay? And that's what this is from, I think. Yes, it is. Okay, so you've got that. You do have the parallel that goes off of this high back here, which, as you can see, does touch a few things. You know what you're looking for with a parallel. You're looking for precise touches, but you're also looking for action after it, right? And in this case, you can see the action was really, it really accelerated, following the touches, right? So that's lower. Here we are. Do we have a top in Euro Pound? I have no idea. If we have a top in Euro Pound, I can tell you that we're in the right area code for resistance, right? In fact, if we do trade a little higher, the 80-60s region would probably be your next area for resistance. You got the highs up there from actually September of 2014, also as a huge low from 2010. That was European financial crisis stuff in July 2010. So you do have some really solid, levels to work with here. Eventually, then let's see if there's uptrend, resistance. Okay, so you are kind of brushing against uptrend resistance as well. So that would kind of put me, Leon, I'd kind of lean towards the idea that you're coming into a top here rather than accelerating higher through this. Okay. See what RSI looks like on the daily. Okay, you do have a really solid momentum divergence here as well. So you see the high here, and again, we're looking at closing prices because here we're talking about momentum, and RSI uses closing prices, so you want to know what the closing prices are. Well, the close made a new high, okay, on March 23rd, and guess what? RSI is significantly lower, not only significantly lower, but it's below 65. So again, that's what you look for. That's what I look for. You look for it to be below 65, and that is a turn warning for Euro Pound. Okay. Again, trading wise, I do think that there are opportunities to buy both pound dollar and buy both euro dollar at decent levels, like 112.65.85 for euro, and maybe 142.80, 143.15 for pound. Okay. So maybe one of those does better than the other. I don't know. That'll probably determine what happens here. But I do think this also speaks to the fact that euro pounds come into resistance and seems to be petering out. I think that speaks to the fact that there's big potential on the upside in pound dollar, right? The seasonality really big for April, best month of the year historically for pound. Good supports coming into 142.80 and 143.15. So that's why I think I like the pound dollar trade on the upside just as much, if not more, than euro. Okay, so we've pretty much covered the gamut here of everything that I wanted to look at. You guys have any questions? Are there any other markets or questions on technique, strategy, analysis that you want to look at? Okay, well, if there are no questions, I'm going to wrap it up here. Basically, just quick recap. U.S. dollar, I think I'd pay attention to this chart, okay? Because pay attention to this chart, 11,953 on resistance in U.S. dollar, okay, and 11,737 on support. Probably equates with euro down back near 1260, 1280, and euro down at 115 or up at 115 here. Same with pound, 142.80, 43.15 on U.S. dollar rebound into resistance, headed up a lot higher. I think there's big potential in the pound for a hell of a short squeeze. Aussie nearing a top, but that top is probably closer to 78. In fact, looking at 77.80 region. Same with Kiwi, looking into 70.30 to 71 before you get a top. So that does say that probably the short-term potential is probably in Kiwi with support around 6,800 to 6,840. Dollar yen stationary, might be trying to base. Kind of hard to see that happening in this environment, but in any case, pay attention to basically 112.98, call it 113 resistance. If you get through there, then maybe it changes the narrative on dollar yen. Crude oil and dollar CAD. Look, dollar CAD's come off its lows from today. Pretty good near-term bounce as crude oil's come off, but crude's back at support, as you can see right here. Okay, if we continue to go sideways to up, it will set up just another potential, crash in crude oil and probably a rip roar higher in dollar CAD. When that sets up, if that sets up, I don't know. Dollar CAD's still at the right spot for a bigger low, as you can see right here. Downtrend, support, as well as obviously very, very long-term uptrend support. Can't really even see it on the daily. You have to kind of look all the way out to the weekly chart. Okay. Generally speaking, this is the right area for a low. Okay. This is a monthly chart now. So you can see how big this level is down to 128.30. Basically, this is 128.30 to 130, right? I think we can get back up into 138 even in dollar CAD, and I wouldn't be that surprised. Okay, so those are all your your dollar pairs. For the most part, dollar bearish, except for really on a trade basis, dollar CAD here. I still think dollar CAD can get a pretty good pop. And then would start looking the other way on Aussie and Kiwi as they get into their resistance levels. So we might be seeing a pretty big change in market behavior, here with over the next day or two or three as we are getting up into this resistance level for the S&P 500, which I started the webinar looking at that chart. All right. All right. So everyone have a super rest of your day, a great rest of your week. Hope you had a nice holiday weekend last week, last week if you do celebrate it, and wishing the best to all of you and yours as we get underway here in the second quarter, starting on Friday. All right. Okay. All right. Everyone, have a great rest of your week. Take care. Bye.